Hey, Jeff.
Hey, Misha.
Welcome to another episode of the North Atlanta Real Estate Podcast with your amazing host, Misha Rawal.
And Jeff Ahi.
And the much anticipated meeting headed by Jerome Powell. It's the Federal Open Marketing Committee, which starts today and concludes tomorrow, is taking place. And a lot of our homeowners, home buyers, and home sellers are anticipating changes in the Fed rates. Tell us more about this. Yeah.
I think what we've already seen, right, is that everybody's saying, well, they're going to lower interest rates and lower interest rates. Well, they probably are going to lower the discount rate. I think already priced into the markets are about a quarter point reduction in the discount rate, which is what the Fed controls. They don't control mortgage rates. It does filter down into the mortgage rates oftentimes. But the main point to say is the market's already expecting this. So this has already been filtered down into our mortgage rates. And we've seen them fall pretty dramatically. I think you have a great example. I mean, you had a client here recently just talk about the difference they had in their mortgage rates.
Yeah, so I have a family who moved from Canada last year, and they've been looking for a house in January. And in January, we were very close to getting a house under contract, but we were outbid because the market was very different in January than it is now. So we finally got a house for them about 2 weeks ago. And the interest rate that they were getting was 6.875 back in January. And yesterday, the lender said that he was able to give them an interest rate of 5.99%.
Wow.
The house price is close to $725,000, so it's a significant amount.
Yeah, so that's a nice savings that they're getting there. You know, they're getting about a $45 per 100,000 they're borrowing, so it's about $225,000 or $225 a month that they're just going to save because of lower interest rates.
Yeah, and you calculated that meant that their purchasing power was up by about 30.
Yeah, about $30,000 in purchasing power. So they could have bought, either have the same payment and have a $30,000 or more expensive home, nicer home, or they just have a lower payment. And
So the interest rate is already priced in anticipation of this meeting that's happening
of a quarter point cut. So the big surprise would be if they cut it by half a point. If they cut it by half a point, that's only about 10 to 15% of economists are expecting that. So that would be a surprise, and then that would shift things pretty dramatically, or at least we will notice it then. Yeah.
So what are the key economic indicators that the Fed will be closely monitoring in the coming months to guide its future policy decisions?
Yeah, sure. So good question. They're meeting again in October, and then they're towards the end of October, and then they're going to meet again at about the 10th or somewhere in that ballpark of December. So they have two more meetings this year. And so what they're going to be looking at to make their determination, they have two mandates, and one is to keep employment full, so low unemployment. And then their other mandate is to keep inflation in check. And they have a guide. They shoot for 2%. Right now we're running above that, 2.7, 2.8%. And so what we're going to be looking for over the next coming months as they're going to be making their decision on is, does unemployment seem to increase? Is the job market weakening, which it has been lately, right? That's been in the news, and that's been one of the big drivers that has taken the market down. And then is inflation picking back up as it has ticked up here since April? They're looking at the personal consumer expenditure. It's a little less volatile index with a stripping out energy and home prices. And so you have this has ticked up from, I think it was 2.5% or so in April all the way up to 2.9% in July. And so it's been going up the wrong direction. And so these are kind of competing against each other, and these are the things they're going to be looking at.
Yeah, so the federal interest rate is going to hopefully impact the sluggish job growth and probably boost our home growth as well.
Yeah, I mean, that's what the hopes is. If they lower the borrowing rate for companies, will expand more and hire more, et cetera. That's the concept. But it takes a little while. 1/4 point cut doesn't do it. If we remember right, the last time they did a cycle and lowered the rates by 3/4 of a point, the discount rate, our interest rates actually went the opposite direction. I don't think people are expecting that now. It has actually gone down here lately. So they're not always linked 100%, but typically they follow each other.
Yeah, I mean, while a significant rate cut is unlikely to have an immediate major impact on the housing market, it could signify a shift towards more cuts in the future. And I think that's what the hope is.
That is definitely what the hope is. So that I think, people are hoping that as we're in the beginning of our market in 2026 and in the spring market that will be under 6% somewhere.
Yeah.
Not dramatic. It's not going to be falling back to 3%.
Yeah.
Everybody would love that, but it's hopefully 5.5 to 6% range.
Yeah, so tell us about this house that you had, your listing that you had on the market for a while. And
I know, right? I had that one in Crabapple Townhome on the market for over 90 days, no offers. When was the last time either one of us had a listing that took 90 days to sell? It's like so embarrassing, but we hit the market. It got a little sluggish after the tariffs. That just definitely cooled the market. And so things finally have settled down. And now with this expectation of, and not just expectation, interest rates, mortgage rates have come down, like you said, about 0.5 point over the past 2 months. Just because of that, I think there's more people out looking now because this home that had no offers, we got 3 parties interested this weekend. We have now a primary cash contract we accepted, have a backup contract in place, and there's a third party that wanted to make an offer also.
So you chose the cash offer.
We did. Yeah, it's more solid. It's kind of a more confident path we're going to get to closing. So
Yeah. And it's interesting that you said cash offers because I feel with the falling interest rates, we'll see a lot of cash buyers have competition from buyers who have to get their houses financed because up until now it was easier to get a cash offer because cash buyers are not necessarily affected by the interest rate as much. And a lot of buyers were waiting for the interest rates to go down. So cash buyers had, the run of the land.
Yeah, and so I think we've looked in our market. It's over 1/3 of the transactions are actually purchased by just cash outright, and there will be. I think from all the prospecting we do and door knocking, and we know there's a lot of pent up demand. People who would love to purchase a home right now, either they're sort of feeling like their interest rate is so low if they're already in a home, or maybe they're in some of the apartments that we talk to the folks and they're just sort of waiting. It's been too expensive. Prices have been high on homes and interest rates have been high, but now it feels like a little relief is coming. So it will get some people off the sidelines, hopefully.
Yeah, and we've heard of this term called home fatigue, and people who bought their houses in 2019, 2020, are kind of stuck in their houses because of the interest rate being so low and they have so much equity. And they've been waiting on the sidelines. They're tired of their houses because maybe the house needs a little work. Maybe they have to move. Maybe they want to upsize or downsize. And we are seeing a lot of, pent-up demand happening, not just from renters moving into the area, but also from current homeowners.
Yeah, you were telling me about a homeowner that you're aware of that I think just made a move out of the state. What was going on there?
So I have a friend, and she listed a house in Alpharetta in the subdivision called Caravelle. And because we know Alpharetta, Johns Creek, this part of the world is a very transient market. We have buyers coming in, we have families moving out. So they went to Chicago because their job took them there. And they were so sure that the house is going to sell because they listed it in the summer, and it didn't. But they went ahead and put an offer on a new construction in Chicago, and they actually moved up the closing date because they wanted to, get school started. Because, buying a house is it's not just a financial decision for a lot of people. It's a very complex emotional decision. It gives you security, the FOMO. What if I lose this one new construction house? And, you feel less anxious in your own home than in a rental.
Yeah.
So they went ahead and got that house, but this house didn't sell. So they have this equity, they want to sell, but they can't.
Yeah, it's tough. If we remember back before COVID, pre-COVID days, people were fairly conservative, and they would oftentimes wait until their home was at least under contract or even closed before they would purchase the next one. We had a lot of contingent sales back in the day. But then fast forward just a couple of years and we hit COVID and the market exploded. And then there were so many buyers out there. If you had to sell your home first, you just weren't going to get that next home. You were never going to win the bid. And so it changed. And we've had so few contingent sales here lately that I think it's something that's going to creep back in the market. And like these folks you just talked about is, they took a gamble, because it is a little more of a gamble now that the market slowed down, that they were going to sell their home quickly. And unfortunately, the market doesn't always cooperate. And
yeah, it kind of tracks into the other podcast that we had about attached homes selling a lot slower, because this is a townhouse, and you did an episode on that, which said that days on the market for attached homes is longer than for single family houses.
Yeah, that's the part of the market that seems to have slowed down a little bit faster. Yeah.
And then you mentioned something very interesting about holding costs, for a property.
Oh, so I guess when we were having a conversation before the program started, we were talking about, oftentimes when we're out representing sellers, especially, and they say, well, hey, look, I don't care if my home sells fast. I don't have a mortgage. It's all paid off. And so there's this perception that it's not costing them very much. But what they don't realize is, even though they probably realize, obviously, they have property taxes, homeowners insurance, and maybe HOA, what they forget about is the fact that they might, if it's paid off, maybe they have $600,000 or $700,000 that is not earning any money in a flat market if homes aren't appreciating very fast right now. And so if it's not appreciating, they are losing the amount of interest that they could be earning on that money. And say if you had $600,000, even at 4%, that's $24,000 over the course of a year. Is $2,000 a month. It's costing them just in lost income that money could be working for them. And so they have to realize they have to add that back into it. So a good rule of thumb is 0.6% of your home value is about your real cost. And so if you had a $600,000 home paid off, it really cost you about $3,600 at least. Sometimes 0.7 is a better number. So up to $4,200. That's your true cost. So anyway, it's just an aside for folks to keep in mind as we are going to be holding properties longer maybe and deciding whether we're going to put it on the market. You have to also know what's your true cost in the equation.
Yeah, so we're rooting for my friend, and I hope her house sells really fast. We're also rooting for other home sellers who've had their houses on the market, and hopefully this federal cut will bring more buyers into the market. And so will this cut significantly increase home sales in Alpharetta, Jeff?
Well, it's kind of the question that's interesting is that we wanted to reach out and sort of answer this question, right? And so we reached out to Stuart Sadler, who owns Cornerstone Mortgage here in Alpharetta, and he was telling me that the new applications that they got in Monday was about double what they have been getting here lately, sort of that post-tariff announcement, which really cooled the market. And so there has been, it's an indicator that good times might be ahead, or better times if you're a home seller. And, for a home buyer, good times because the interest rates are down. Nationally, we took a quick look, and new mortgage applications were up 9.1% last week. So that's a significant increase. But we do have to keep in mind, I wanted to say, okay, I was thinking to myself, wow, we probably had a great past 10 or 11 days because the rates have been coming down. So I compared that to 2024. And so what we found is, if we compare the exact same weeks, it's 2 weekends straddled by the week in the middle, that's primarily sort of the 5th of September to the 17th was last year. And then this year we took the 6th or the 4th of September to the 16th, today's date. What we notice here is that sales are still down, both in sort of Forsyth and North Fulton, still down about 22% over the same period last year. So even though it does feel like we had this little spurt of activity, we're still lower. And so I think that's one of the things that we're going to be watching. That we'll report on, and then do we get this, what is going to be the result of tomorrow? Do we get a 1/4 point cut that everybody expects, or somehow we're going to get this magical 1/2 point cut?
So stay tuned for our next episode, and stay tuned for what the feds bring us. And do you think we should end this episode?
Yeah, let's wrap this up, and let's do another one tomorrow, or let's say, we'll do another one tomorrow and let everybody know what happened.
Fantastic. Okay, so these are your amazing hosts, Misha Rawal
and Jeff Ahi.
signing off.
Bye for now.
Bye.